Hello everyone, this is Martin. Welcome to another weekly video update on the trading opportunities that I am looking at. And we're looking at the week of June the 12th to the 16th. Now this week is going to be interesting because on Wednesday afternoon at 2 o'clock, we have the FOMC and also the interest rate decision for the US dollar. Everyone pretty well believes that the U.S. is going to increase their interest rate by 1/4%, and that may be a foregone conclusion. But the thing that we traders have to look at is what is the U.S. currency going to do against the other currencies for the period up until the news. A lot of people trade or think this way. You would buy on the rumor, in other words, looking at USD to gain strength up until Wednesday, and then sell the actual news event, which could prove to be a very good volatile event for a lot of traders around the world. So this is what we're looking at for this week. We're going to take a look at all the charts in a second, and right now we're going to go to the disclaimer. This information in this video presentation is for educational purposes only. I hope that you do your own homework, and I provide you with as much information for you to determine if the information I give you makes any sense. So as always, trade at your own level of risk. Always use stop losses, and hopefully this video and all the information that I provide you will help you become a better trader. Okay, so that's that. Let's get on with the actual currencies. Okay, this is the Euro USD daily here, and you can see that this is the price action from the right of this red vertical line. This is of the previous Friday. So here we have the next five trading days. This first black bar right here is the Sunday, Monday trading. The next one Tuesday, Wednesday, Thursday, and Friday. Now, last week, price had pretty well gone sideways for most of the period up until Wednesday, and then on Thursday we had a huge down day. And take a look, everyone. The price on Thursday with this big black candle closed or broke below the trend line. You can see where we had joined the previous low here along with right there. Okay, so price had broken the trend line and now seems headed. Well, not only is broken the trend line, but is closed below the 8 EMA, and that's always important. And now seems to be headed to the next lower area of support, which is outlined on your charts with this gray rectangle. And you can see I put in a longer term trend line right here, starting with this big swing low way back here in middle of April. And we join the bottom here, and this has created this longer term trend line. So price certainly seems to be headed down lower, down to this zone, and also with the idea that the U.S. Will be increasing their interest rates. You could certainly see that price heading down in that direction on the actual information that is provided worldwide. A lot of people think the interest rate will be hiked up on this Wednesday, but again, that's the rumor. So in other words, we either buy or sell on the rumor, and that's what we could do right here as we see price coming back down. And then on Wednesday, price may be very volatile, and there may be a bit of a retracement. Okay, so take a look at the MACD. MACD line is still above zero, but it's heading down sharply toward the zero, and the momentum with these momentum bars is below zero. So the momentum to the downside is gaining strength. Now we move on to the British pound USD, and take a look at this. Last week we had this huge bearish candle. Obviously this was in response to the disastrous UK elections. Theresa May just having a bad day, and She's now in damage control, so this certainly is going to impact this currency pair, or the British pound in particularly. And I see further downward movement here. You can see price broke below the 50 moving average. Take a look at the MACD, well below zero here. So I see price perhaps. Maybe a bit of a pullback first, but look to take a sell on a pullback with evidence. And once it breaks this moving average here, price could certainly come all the way back down to retest the previous swing lows, the previous highs here, and this is now support along with the 200. Remember, the 200 acts as a magnet, and once price comes down to this area, price most likely will be drawn right down to retest the 200. Okay, now we move on to the New Zealand USD. This has been one of the stronger currencies, actually going back about 3, 4 weeks, right here to the beginning, almost the beginning of May. And you can see this currency, let's take a look here. It's gone up about 385, 390 pips from about beginning of May. So this is certainly, it's due to turn around. Here on Friday, we closed with a bit of a bearish doji. You can see that right here. It's a black candle. I think price, and again, take a look. I've marked this as an area of resistance. Take a look at the previous history where my cursor is. Do you see that? That is a previous swing high. So here we've retested that previous swing high, and I see in the short term price certainly coming down to at least the 8, and if it breaks that, then down to to this major support zone and the 200. Here's the 200 with the red dash line. So the MACD line is still above the support. You can see that right there. Okay, and it's starting to curl over, but I believe it is going to come down. And so again, you could either take a sell trade, perhaps wait for another bearish candle, then you can take a sell trade, and that's what I see for that pair. Now we get to the Australian USD, and let me just take that off the charts. It's already turned over. You can see we had this big black bearish candle on Friday. I see it coming down even further. We have a confluence here, just a confluence of support. You can see the trend line I've drawn in here, just kind of let me just take a look here. Here's a previous swing low, swing low. So every time price came back down, it retested this low. It did break, came back up, came back down, it retested it again. So you can see this area certainly is an area of support resistance, and I believe price is going to come down. My bias is to the downside for the short term, especially prior to the election. I'm sorry, prior to the interest rate decision on Wednesday. Okay, and you can see the histo bars. There's momentum uh, to the downside right here. So that's what I see there. And this pair also trades in tandem with how well gold is doing. So on Friday, you can see here. Um, well, on Thursday we had this kind of a bearish doji right there. On Friday we had a huge bearish black candle, and let's take a look at gold. Okay, so you can see gold right here is also has come down. The last 3 days of last week, huge downward movement. So there's weakness in gold, and that obviously translated to the Australian dollar weakness there. Now we move to the US CAD, and I've mentioned this already in the last two previous videos. We are in a large bearish flag, upside down flag, and by that I mean, let me just draw that in. Here's the flagpole, okay? There is there's the flag, okay? It's an upside down flag, and my my bias is right now just sideways. We want to wait to see what's going to happen, And again, price may be determined by the price on oil. We're going to take a look at that in just a second. But right now, it's just going sideways, just up, down, up, down, up. And again, when you see price like this, what you could do is play the upper and lower, well, the upper acting as resistance, lower as support. So once it comes up here, you would take a sell trade. Once it's down here, take a buy trade. So basically, you're playing the range, but right now you really want to wait. It's sideways. You want to wait, and if you believe price is going to go lower, you want to sell below 133.80. If you believe price is going to go higher, you want to buy above 135.36 to the upside. Okay, so that's what I see there. Now we move on to oil. Again, the reason I show oil is to show you that this often determines the direction of the US Canadian dollar pair. So in this case, you see we've had a huge down week. Last week was uh, down, okay? And we'll take a look at the previous swing low here. So you can see we've had kind of a double bottom there. We're retesting that area again, and this you want to wait and see what happens. You always want to trade with evidence. So here you want to wait to see if price breaks lower or price breaks higher. You want to wait for to see if price breaks higher. You want to wait for one bullish candle to the upside. For the downside, you want to see one more bearish candle. Okay, and then you could enter a trade. Now we move to U.S. Swiss franc. Now this one is made kind of a rounding bottom pattern. We have broken above the 8 EMA, which indicates that, and if it stays above the 8 EMA, then price certainly would head higher. I've already marked in the next level of resistance. You can see that right there. So um, it's not a convincing bullish candle, so you may want to wait a little bit for more evidence, but it looks like price will be trending higher. And in this case, you want to buy above 0.9730 if you think price is going to go higher, above 0.9730. Okay. You can see the MACD line is curling higher toward the zero, and we have bullish momentum bars right there. Now, finally, we move to the US Japanese, similar to the US Swiss franc. Price did go up last week after price came down and retested support here. Price did bounce up on Wednesday, Thursday, and Friday with the last three candles. We're now sitting at resistance. Okay, resistance because take a look at the previous swing low here, and look at this area where my mouse cursor is. So right now, it could go up a bit higher. Again, it all again, this is the big question. What will the U.S. currency do prior to Wednesday's possible interest rate hike? Well, again, you may want to just wait. It can if it goes higher, a little bit higher. Take a look at all of this confluence of resistance with the moving averages. Here we've got the 50, this dash line, we've got the 30, 34, and then we've got the 89. So we've got a confluence of different moving averages just higher. So I believe it will go a bit higher, but it could also bounce back down, and then you could watch for a break below the trend line here. So um, this is what I see for the currency pairs. Hopefully you are happily trading and making some pips. And we all look forward to this Wednesday with the FOMC and at 2 o'clock in the afternoon, the interest rate hike decision. Will it be another 0.25% interest rate hike? And once that happens, what will happen to the US dollar? Will it shoot up higher? Or will it actually pull back a bit and then shoot higher? Well, we will all have to sit on our hands and just wait for the decision. So take care, everyone. If you have any questions, please feel free to call me or I'm sorry, send me an email and I'll be more than happy to answer. Take care. Happy trading. We'll talk to you soon.